Welcome to another update on the market with Net Lease Commercial Advisor. Again, I'm Eric Odum, Principal at Net Lease Commercial, and today we have with us Scott Jacobson, who is with
North Star Bank,
New Star Bank.
Commercial Banking Manager.
Scott has been a banker in this area for, gosh, Scott's probably been 22, 23 years now.
At least.
So he's been around a little bit, and he presented me the other day with an opportunity they thought was very interesting in the real estate market in terms of the financing. Of course, there's been a lot of issue about illiquidity in the market. We have our feelings about illiquidity. It really has less to do, in my opinion, with the banks and probably more to do with the borrowers, but perhaps we're going to talk about a program today that could help on some of those liquidity issues. So let's talk about it. It's the Small Business Administration's 504 loan program. Why is this a program that people should pay attention to?
Well, the 504 program's been around for a long time, as long as I can remember, and there's some key components to it, which, if you don't know it, it's very attractive. One being a 10% equity requirement for the borrower, where most banks typically will require anywhere from 20 to 30% equity. So,
And that's been going up recently, right? I mean,
that's been going up.
Right.
The banks are requiring more equity.
Mm-hmm.
And then the other key piece is everybody knows rates are so low today, and the SBA rates are very low as well. And the way the program's set up, the SBA takes 50% of the loan amount and actually fixes in a rate, and that rate is in the low fives, and they lock that in for 20 years.
Wow.
So you get a 20-year fixed rate on the SBA's portion of the loan, which is half of it, and the 40% portion of the loan, which the bank holds, is locked in anywhere from 5 to 10 years.
So you still have a balloon, there's a smaller portion of the amount that's going to be subject to the balloon. The government portion is a 20-year fix, which is pretty attractive. I know dealing with a lot of small business owners when they're purchasing their property, and physicians and lawyers too. I mean, their thought is that, gosh, in 5 years, I don't know what the interest rates. I want to be a little bit more sure about what my payments are going to be. And this seems like a really good way to stabilize their payments over that period of time, not worry about the balloon, the adjustment in interest rate, and that sort of thing. Let's talk a little bit about who you think might be suited for this type of a product.
It could be any for-profit business that we're going to look at underwriting this credit to typical standards, which would be a business has to be performing well, even in this tough environment, has to be in business for at least 2 or 3 years, has to have a little equity in their balance sheet, and doctors, professionals, manufacturing distributors, they all qualify. Where this program is really helpful is if there's something with the credit that just doesn't quite get the approval in a traditional manner, the SBA program could push it over the top, because the bank actually, at the end of the day, the bank is in at 40% loan to value, and the SBA is in for 50% of the capital or the equity, so that the bank's first position is very well secured.
So the SBA is essentially taking away some of the risk of the bank, which makes it a more attractive deal for the bank to go ahead and make the loan.
Yeah, absolutely.
Okay. And I think you talked about there was a chiropractor that you had worked with.
Yeah, we had a case here just recently. We had a chiropractor that owns half a dozen locations. Leases half a dozen locations throughout Tampa Bay, and felt like this was a great time to negotiate those leases to purchase, and was a little concerned about putting 20 to 30% equity into the traditional financing, and thought, this SBA program would be a great avenue for him to acquire those offices, lock in a fixed rate for 20 years for half of it, and take some risk out of the balloon, which you mentioned can be sometimes give heartburn to clients when they know that there's going to be a balloon after 5 or 10 years.
Mm-hmm. Great. So let's talk about in terms of size. I mean, what is this? Can you do this with $10,000? Can it be $50 million? What are the size requirements?
Minimum size $125,000, and maximum is $10 million. So it's pretty wide. It covers most transactions.
Most transactions, and in Tampa, I mean, we're probably, for your typical physician practice, we're less than $1.5 million, and certainly more than $125,000. So,
right.
Yeah, it's going to be right there. I don't want to make this sound like it's only for physicians, because of course you guys have had experience with doing this with manufacturing companies and distributors, but it seems to be that the professional practices tend to gravitate towards this more, and maybe that's because that we tend to be more balanced in the Tampa Bay area towards the professional industries.
Well, particularly if you're a physician or anybody for that matter, that you're going to be in your building, you're going to be there long term. And one of the requirements is that you have to occupy at least 51% of the space. So it's an owner-occupied facility that we're talking about. But if you're going to be there for a while, and if you're going to pay somebody, you might as well pay yourself.
It's not a speculative investment then. I mean, this is something for an owner-occupied, running their business, has a sound business, has an established business, and so this really sounds what this loan program is really all about. Let's talk about some of the folks that perhaps can't get this loan, because we talked about, who can. Let's talk about some who can't.
The ones that jump out at you, if you're a not-for-profit corporation, you don't qualify. And if it's real speculative, then you wouldn't qualify either. So those are really the two big ones. And there's a few other ones, gambling establishments, and the obvious ones that jump out at you.
Okay, very good. So how does this compare with the fees to traditional bank financing?
The fees, and the SBA's got some programs now that they're reducing fees to make it more attractive for borrowers. There is a little over a 2% fee on the SBA portion to run it through, and so that has to be an embedded cost. And so at the end of the day, if SBA is running 20 years on their fixed rate portion at around 5.25%, and you throw another 2% of closing costs, you're going to be somewhere in that 7.5% range all in, which is still very, very attractive.
And then you throw the balloon, or the lack of balloon on the government portion, the SBA portion of it,
Right.
and it becomes pretty attractive. So you have the fees, which are a downside, but then of course you get extended. Even with the fees included, it's relatively inexpensive debt.
No, and to compare that, if you walked into a bank today and asked for a traditional owner-occupied mortgage, putting 20 or 30% down, and looked at a 5-year balloon, our rates would be somewhere in that 6.5% range, fixed for 5 years, and we're going to charge anywhere from 0.5 point to 1 point. So your cost at that point is somewhere in that 7 to 7.5% range anyway for 5 years, where you can lock in the SBA portion for almost the same time, but for 20 years.
Great, terrific. Well, why don't we just shift a little bit here and just summarize in terms of why we want to do this, or why we want to at least consider this, is because it is. The SBA is guaranteeing it, so we're able to be perhaps a little bit more aggressive on the underwriting than you guys typically would be. It's only 10% down, and the government portion of the debt is for 20-year amortization with no balloon. So those are certainly the benefits to it. People we want to, that we're looking for, the folks that you guys want to try to lend to, they're going to be anybody with a track record purchasing real estate between $125,000 and $10 million. Is there anything else that I'm leaving out here in terms of summarizing this program?
We haven't really talked about, but there is the opportunity to throw some of the equipment into the acquisition purchase and roll that into the loan amount. So
Okay.
if there's a capital-intensive business or any business for that matter, we can roll that cost into the SBA, as well as a significant portion of the fees can be rolled into the SBA loan as well.
Oh, that's nice.
So there's some very creative ways to make this worthwhile. And if you're a business owner that you're in a lease and you have an option to buy out that lease, we've seen a lot of that activity recently as people recognize that it's a good time to be a value shopper for real estate. And if you could lock in these rates for long term, it's a good time to move on it.
Awesome, good point. Scott, I'd like to thank you again for taking your time today to talk with us, and hopefully you guys got something out of it. If anybody wants to get in touch with you, Scott, how would they reach you on this program?
You could call me at 813-549-5030, or you could email me at sjacobsen, and Jacobsen spelled Jacobsen, at northstar-bank.com.
North Star Bank is located in the Beer Can Building in downtown Tampa. Again, we appreciate you joining us today, and hopefully you got something out of it. Feel free to contact Scott if you'd like to have more information on the 504 SBA lending program. Thank you again, Scott.
Thank you, Eric.
Take care.